Live to Canberra, that's where the Treasurer, Josh Frydenberg, is giving us an update after the GDP figures came out a bit better than expected a short time ago.
Over the past 2 years, farm incomes have fallen by over 30%. Living standards, as measured by the ABS's preferred measure of real net national disposable income per capita, are 1.2% higher through the year. Productivity growth increased modestly by 0.2% in the quarter to be 0.4% higher through the year in trend terms. I've spoken numerous times in recent months about the need for all levels of government and business to address Australia's productivity challenge. To this end, the Morrison government has legislated the biggest tax cuts in over 2 decades, committed to a $100 billion infrastructure pipeline and to the creation of more than 80,000 new apprenticeships, as well as a new wave of deregulation reform to boost investment and create jobs. As the Reserve Bank Governor has said, Australia's economic fundamentals remain very strong, and Australians can be confident about their economic future. But we are confronted by significant domestic and international economic challenges as a result of the bushfires and the coronavirus, which is still evolving. Australia is well placed to navigate these challenges with our economic plan, our responsible budget management, which is contributing to the resilience of the Australian economy, which is reflected and reinforced by today's national accounts. I'm just going to quickly refer to a couple of slides, a few slides, and then happy to take questions. The first slide clearly points out that in the December quarter we saw 0.5% growth, 2.2% through the year, which is an increase on the 1.8% that we saw in the through the year numbers to the September quarter. And it completely rebuts the argument put by some that the Australian economy was weakening in the back half of last year. To nominal GDP growth. Nominal GDP growth is 4.1% up through the year, but it actually fell in the December quarter. This reflects a fall in the terms of trade, where iron ore prices were around 10% lower, and that the basket of coal exports in terms of prices were down by around 15%. Next slide. This is again a positive story. 13 of the 17 different categories of consumption are in positive terms, and 5 of the 7 discretionary categories are also in positive terms, including recreation and restaurants. The next slide is new public final demand. New public final demand is obviously reflecting what is happening with government investment as well as government consumption. At 4.7% through the year, it's well above the 10-year average, and it's a reflection of what the government is doing to strengthen the Australian economy. The next slide is farm GDP. This is an interesting slide because, as we've seen, the drought has had a major impact, being 2.2% through the year. But we saw a small uptick in the December quarter in farm GDP. This was a reflection of 2 factors. One is the destocking that continues to take place on Australian farms. But there was also an increase in demand for Australian stock as the African swine fever took hold. Next slide relates to the housing savings ratio. The household savings ratio has come down slightly to 3.6%. As you remember, in the last quarter it went up off the back of people getting the tax cuts, putting money effectively into the bank or into their, effectively saving that money. Now, with the tax cuts and people have received their low income tax offset, now that number has started to come down. compensation of employees, this is a positive story. This is the wages bill for the Australian economy. Above the 10-year average and 5.1% up. This reflects the strong employment growth that we've seen across the economy and the continued increase in wages. Next slide. Again, international employment growth comparisons at 1.9%. Australia's employment growth is well above comparable countries. So our unemployment today is at 5.3%, but our employment growth at 1.9% is extremely strong compared to other comparable countries. The next slide is a reflection of the December quarter real GDP growth numbers. Australia and the US at 0.5%. But again, Australia in the quarter that we are talking about today has performed well compared to other countries. The last slide. International real GDP growth comparisons through the year. Australia at 2.2% is just below the United States, but as you've heard, the IMF as of January still has Australia this year and next growing faster than those other comparable economies. I'll take some questions, yes.
What's the risk of a negative outcome for this quarter, given the bushfires, the coronavirus?
Yes.
And even if you're putting together a package, that's not going to come into effect for this quarter now. So what's the risk, do you think?
Well, I think the risk to the economy from the spread of the coronavirus is substantial. And we have seen Treasury estimate about a 0.2 percentage point impact from the bushfires, which will fall predominantly in that March quarter. Treasury is finalising now, in light of what had happened last night with the US Fed Reserve, reducing interest rates, and tonight Treasury and myself on a phone call with the International Monetary Fund for an update on the spread of the coronavirus and its economic impact. So once that call is completed tonight, Treasury will finalise tomorrow morning their estimate of the impact on the March quarter, and the Treasury Secretary, Stephen Kennedy, will talk to that number at Senate estimates tomorrow morning.
Treasurer, a report by Deutsche Bank has predicted that Australia will fall into a recession for the first time since 1991. Are we heading for a recession?
Well, I think what these numbers show is how resilient the Australian economy is. I mean, we've had bushfires, we've had floods, we've been dealing with the ongoing drought, as well as the trade tensions between China and the United States. These are events that are outside of Australia's control. Yet despite that, Australia continues to grow. And we have seen, importantly today, consumption up, net exports up, public final demand continues to contribute strongly to the Australian economy. When it comes to the impact on the March and subsequent quarters, obviously we would like to mitigate the negative economic impact of the coronavirus, and that is why the Prime Minister has foreshadowed that we will be announcing a series of measures which are designed to keep businesses in business and Australians in jobs. What we will not be doing is we will not be jeopardising the hard work that we have undertaken over the last 6 years to bring the budget into the good health that it is in today, where Australia is living within its means. What we will also not do is repeat the mistakes of the past, where there were cash splashes that saw wasteful spending on everything from pink bats and overpriced school halls to cheques to dead people. We will not be doing that. We will be having a targeted, a responsible, a scalable approach to what is a very serious economic impact as a result of the spread of the coronavirus. So, Phil,
the PM hinted yesterday at an investment allowance as part of this announcement. These numbers today show investments down. One of the things that did fall in the quarter, can we sort of take it as a given that will be part of the package? And will it have a domestic focus? Will the money have to be spent domestically?
Well, Phil, nothing's a given in this game, as you know, and the details of that package are still being worked through. I do point out that today the Deputy Prime Minister has already made a statement that he is contacting state premiers and chief ministers and asking them to put forward, as we did last year, investment proposals that could be undertaken in the next 3 to 6 months, effectively, as quickly as possible, in fact immediately if that is possible. So we'll be waiting for that feedback. But as for an investment allowance, this is obviously under very serious consideration. This is something that the business community has asked for, and if you look abroad, some other countries have put in place fiscal responses which include support for business and investment, because this is a really important point, Phil. We want, obviously, Australian businesses to get the support through this economic shock. But when we are over this economic shock, we want the Australian economy to be stronger. We want to have greater productivity, and investment is a key part of that. So obviously that will be a focus for us.